So here's the thing. You're in an uptrend. You tap whatever level. Okay, let's just leave it at that. You tap whatever level. Um, or you get a liquidity grab, whatever. You change characters. Maybe you had a divergence, something else. Um, and here's the thing. A lot of people will tell you this is an order block, right? I don't like it. For one simple fact. This high is higher than that high. Okay? So every time I see this, I'm afraid of taking a short trade like this. I'm afraid of doing this. Even if it works, I'm afraid of it. Because since this high, this bearish candle's high, was not higher than that, then it means that this candle's liquidity, which is supposedly what a lot of people would call an order block, I'm afraid that candle's liquidity, the high, is going to be taken before moving down. So I'm afraid of it. Doesn't mean that it's not going to work. I'm personally afraid of it. So I'm not trading that. I can even mark it, but I'm not trading it. However, the thing is that we got a change of character. And as you can see, it worked. Okay. And now I see something that I do like if we make new structure, which is this order block actually did get its high taken. So this was the first reaction. Let me hide X candles. So this was the first reaction. Okay, it worked. Whatever. I'm not going to stress about missing an opportunity. Okay, it's just something that I'm backtesting as a rule. If I see this, I'm not going to trade because it's possible for it to take out this high first and only then move. So I'm not doing it. Also, for example, I'm not taking a trade with a stop loss there because these are all descending highs as well. I'm gonna move it a little bit above so you can see it better. But these highs are descending as well, so I'm not getting into it. The only idea now that I'm interested is that if price does this, because this last contrarian candle, let's say it like that, contrarian candle to the move down, got its liquidity taken before moving down, this for me is a valid bearish order block, which in my eyes I can trust as a trade like this, because this high is more protected than these highs because it took the liquidity of something before moving down. If it moves down, I'm not sure that it's right here that it starts moving down. Okay, so in theory we would not be in this trade because it didn't change, it didn't make a break of structure, right? I'll leave it there anyway, just for reference. Okay. Now, for example, break of structure confirmed. With a liquidity grab before moving down. These gaps between candles, these are not imbalances or FVGs, these are volume gaps. So yeah, you see that on the 1 minute. Yeah, but you see that on the 1 minute a lot. So first trade, liquidity grab before moving down, FVGs and vectors, inviting price to come back here. Notice also that this is the first time that we have vectors going down. We don't have any vector above this. I don't see any other order block following the same rule yet. So we are now theoretically in that first trade. Let's just imagine that we do a 2R. Limits. I see this, I see a liquidity grab, I limit this as is, like this. This is my identified order block as according to my I'm going to say rules, even though this is not yet a back-tested strategy, but this is the idea. Okay, so now I see another one. But we do have to break structure here for me to enter. It's the same rule. Last candle, liquidity, move displacement down. Wow, that was crazy. Again, same thing. I see another one here. It's always the same logic. Contrarian candle, liquidity grab. It's very slight, but it is there. When price reacts to this, a lot of times it will just continue reacting. Nothing yet. Just ranging. I think we tapped it. Yeah, so that would be another one. I don't think I see anything following the same rule again. I'm a little bit unsure about this one because this is higher than the previous ones, but yeah, it's a little bit more confusing. But this one, okay, this one's clear. Also, if you notice, every time these form, you get a considerable displacement as well. For example, when you got this, there was an FVG here. It's a very small one, but you do. And they are vectors, which invites price to come back to it. And the thing about this, using this logic, is that if you just do a 2R, it's a lot of times it's very common to get it. I don't know if we're going to retrace back to this guy. It seems it's wanting to start to move. Okay. But again, the same logic. I'm not using the block as a stop loss. I'm using the supposedly protected high. The idea, I'm going to guess it does, because, for example, this is a scalping strategy that I'm testing, but this is actually the REMC concept. What is the REMC concept? REMC stands for range initiation mitigation continuation. And this is my main strategy and has been for a long time. The way it works is I've been using this for a long time. Either for reversals or continuations. Imagine that you get into this situation. You have a downtrend, and all of a sudden you stop making. What the fuck? Okay, let's ignore that. All of a sudden you stop making lower lows, and you get into like an internal liquidity slash consolidation range, whatever. Uh, when you get into this situation, you will have a lot of, well, you will have a consolidation, a lot of candles that basically don't go anywhere, right? And all of a sudden, imagine, what the fuck? Imagine that you get a liquidity grab, just an SFP, like so. Sorry. Let's say that this is an SFP. And after the SFP, right after, it cannot take like forever to get out. Right after, you break out. So this is your range. This area is your range, which means this section, like so. This is your initiation. So now what you're expecting is to go back into this section for a mitigation. And the idea is that whatever happens inside the mitigation area, supposedly that high is protected because it took out the liquidity of the range. So because price is fractal, what I'm talking about here is the same idea, but looking into specific candles. And why is this important? I'm gonna delete this. Just show you where liquidity grabs happened. If you notice, I'm going to go into very small detail, right? So we are downtrending. We stop there. We make a high, and we make a low that is not lower than the previous one. So very fractalized speaking, this small, tiny, minuscule movement is a range, even though it's on a very small time frame. But it's a range inside of it, right? You get the liquidity grab of it, so technically this zone becomes your range. You get the liquidity grab of it. When price comes below the range, so it closes below the range, after going back into it, this is the mitigation movement. Supposedly that high is protected because it took out liquidity before moving. The only problem about this is that it may just be for a small movement, so that's why I'm calling it a scalping strategy, right? However, I'm going to duplicate this window and talk about our 30-minute order block that we lost, which was this one, right? If I'm not mistaken. Was it? Are you sure? I think so, because we are here now. Yeah, it was this one. There were two that I marked, if you remember. One was that one on the 30-minute, and the other one, I think it was either on the 10 or the 5. It was the 5. It was this guy. I mark out these two, and I wanted price to go to the lower one. Well, price hates me, so it didn't. Actually, price hates both of us. So the thing is, it came back. It came back to this area. If you notice, this zone is basically the same concept. We were in an uptrend. Look, that's a sweep. We can call that a sweep. But then, you know, we were doing this. We take out liquidity, we break out, and while doing so, we change the structure. And this is the most important part. We change the structure with this guy. Because changing the structure is the confirmation that suddenly the selling pressure that existed here is maybe not fully going away, but it's losing steam. And this is the same idea for this section. Okay, it follows the same rule basically. So in terms of looking for a trade and the theory of a range, supposedly you want to look for a trade inside this red area, which would be the discount area. Let me hide my marked levels, by the way. Okay. So it's on the 30-minute. The logic is the same as I was showing you on the 1-minute, which is we are going up. This is the last contrarian candle that had a liquidity sweep and then moved up and changed structure. So in theory, this low is protected, and this order block might be your point of interest, your entry. This is the same logic for this guy. Even though this low exists, this candle right here like so. My dog is going to start barking at the mailman. Look. Mia. Mia. Man, and she likes her fur on the back and stuff gets all like a fucking hyena. She gets angry, man. She hates the mailman. Mia, go back to sleep. Okay, so theory. This candle got its liquidity taken before moving up, so that low should also hold. I'm not saying that the candle cannot be even fully mitigated, but the low, supposedly, it's protected. The only idea that is protected, it's because it took the liquidity of the previous candle. That's just the logic is just that, nothing else. So going back, you have that same concept here. For example, in this case, you had a very small fair value gap here, which we reacted to. And in theory, again, notice this. I didn't even consider this one, but you have this last block. On the candle right after that, you get a reaction to it. If we had opened the trade right here, for example, as a limit order when this candle closed, imagine that this candle closes and you use this as a limit order. That was another one. As we are going down, if you notice, the sorry, lower high, lower low. Yes, sorry, lower highs. I would say equal, maybe. Lower high, lower high, lower high, lower high, lower high, higher high. Where does price retrace to? That candle. Now, going back to our very sad situation, getting out of replay. We had this tap. I'm going into replay and we're going to see this pattern together. So, man, me too. So, we're in this pain together, my brother. We're together. So, first things first, we want to get out. We tapped our point of interest. We go into the 1 minute. Now we want to get out of this zone. First thing that I'm seeing is that same logic that we talked about is already here. This is the last contrarian candle. There was a liquidity sweep, a very tiny minuscule fair value gap here, and we may get a reaction there. We also have a vector up to the upside, which invites price to start going up, so that's also a good thing. But if we want to be extra safe, we only want to start looking for a trade after we break this, because I mean, you can use ADAS, for example, and search for big trades to see where trapped guys are being trapped, right? But other than that, just looking at the chart, you don't know if it's still going to continue down, right? Well, yeah, my point exactly. So now we want a change of character here, the last high that was made. And for example, this would be the last guy. We get that change of character with a close, which is extra nice. And we have two things: fair value gap as a possible entry. And we know that in theory this low is protected. And we also have to consider the bigger scheme of things, right? We already have a change of character on a slightly higher time frame than this. And we have other confluences for looking for trades. Let's not forget that we are looking into this as an SFP of this. We have a bigger bullish market structure to consider. So it's not like we're doing this on a random place, right? We are supposedly bullish. We have reasons to go up, etc., etc. So going back to the 1 minute. So this is a possible entry. Notice the amazing 0.20% stop loss. This is an idea. Let's see if we get that order block logic anywhere else. For example, this low, if you look at these numbers here, you can, when something is really hard to read visually, you can look at these numbers. So if I put my cursor on this candle, you can see that the low is 42287.1. The previous candle is 40 cents higher. So this is technically a very minuscule range on maybe the 1 minute and lower time frame, but it's still range, and the liquidity of that range was swept. So once again, I'll even put the stop loss here. This is another possible entry. If you want to be like a scalper, you can even use it just to make 2R. But in theory, we have reasons to go a lot higher, right? We have reasons to go there. I'm just for shits and giggles. I'm just going to target that. Just that. I don't know if this will... I'm honestly doing this the first time with you guys because you asked and because I'm supposedly showing something that was for the giveaway. So, you know, if it fails, don't kill me. But let's see what happens. It would fail. Let's see about... Oh, by the way, I forgot about this imbalance. So this is technically also valid, right? But let's imagine that we were risking 1%. We just lost 1%. So we would supposedly be in a trade from an imbalance. Let's see if we lose another 1%. Is this lower? It's not. So this candle's low is still lower, so it doesn't follow the rules. Now this candle follows the rules. We are supposedly... We just lost 1% and we are supposedly on... Oh, by the way, we just changed character too. On the 1 minute, I might add. I'm in caps. So again, let's imagine that we want to add to the trade. 0.07 stop loss. Okay. So this trade, the lower one, still didn't activate. I don't know if this one will. I'm trying to keep... Oh, fuck. No! I clicked... Wait. I don't want to look at it without... How should I do this? Because I don't want to cheat. God damn it. I'm gonna have to... Where were we? God damn it. Wait, did it delete everything that I did? Oh, I'm on fucking Ethereum. Okay, so I'm gonna try to not look there. Change back to the 1 minute. Okay. Sorry. What happened was that I accidentally pressed space. So I changed to... I changed to the next item on my watch list. And if you are on replay and you press the down arrow, it starts going at whatever speed you have selected here automatically. So we were saying that... Okay, I think it's here. By the way, let's use the same target. 43,050. 43,050. 43,050. 43,050. Oops. Okay. Now zooming in. So we are supposedly in that trade, right? from the imbalance. We are now waiting for that block over there. I don't see yet any other like that. Not yet. Okay. I see the same pattern here again. I mean, is it? It is. By 10 cents, but it is. Another. %2 lost. Are we getting back to that? Okay. Now we're in this trade as well. This has not yet activated. Don't know if it ever will, but I'll leave it there. Notice that now we also have this guy. Oops, sorry. Same target. Okay. We are now in it. As well. This is a little bit hard to read because it's too bright, but I wouldn't enter on this one because it doesn't follow the rules, you see? It's kind of hard to see. Okay. Lower low, higher low. So this candle did not take the liquidity before moving up. This was, however, a very Andre trade. Fair value gap, right? He loves his fair value gaps. But continuing. If we okay, never mind. I was going to say when we were here, if we were to close above, then this would be another block. And now this one is, I think. No, equal lows. I don't trust equal lows as well. But that one over there is another block. Okay, if price actually comes back to this and doesn't go below it, I'll go fucking crazy. But I'm trying to do this mechanically, so I'm going to respect it. The 0.02 stop loss. Ah! What a bitch. What a bitch. Okay. Can we maybe say just for testing purposes that I could go like this. Just 1 cent and it would be valid. This would be, I mean, this would be insane, right? 0.02 stop loss if I use the same targets. I mean, is this what? A 79 risk to reward trade? Fucking retarded. Okay. Continuing. Exactly. Actually, from a professional trader's perspective that trade like investments, that's 1 trade a year. Okay, continuing. I don't think this was this. Okay, they weren't. I was going to say this followed the rules, but it doesn't. But this does. So again, no. What we lost? What 2% so far, right? I think. I think I saw 2 or 3 that lost. This one lost, right? And this one as well. This one over here. Okay, so 2% lost. And we are now from this one and this one. So 19R trade here. 26R trade here. And also this one, 24R trade here. And I'm not even... Okay, I'm not gonna consider this one. But it just tapped it and continued. But whatever, I'm not gonna consider that. Let's see if this loses. I guess it doesn't. At least not for now. But we would already be in. Oh, by the way, I forgot to update the 16R. There is one there that I didn't consider, but just to keep on showing you the idea, this was also a valid one. Okay, I didn't actually notice it until now. As you can see, it again follows the rule, and again doesn't get the low is protected. $25. Actually, this is also valid. The only thing, by the way, the only thing that I am terribly not sure about is the idea, like, we have 3 candles here and the liquidity sweep. Should I include the liquidity sweep, the full 3 candles, or just the last one? And that I don't know yet. I need to test that. But again, this is supposedly, mechanically speaking and doing things, this is supposedly another train. %3 loss. Or 4% if you include this one. Small downtrend appears. Apparently, I mean. I was trying to see if... No, I don't see the rule being applied here. Oh, sorry. Is it 82.2, 82.2? No, they're equal. I should have marked that one up. Supposedly. And again, supposedly. And again, supposedly. Either that first one or the one after that, this one. It's always the same rule. Last contrarian candle, sweep, move up. Last contrarian candle, sweep, move up. It's always the same rule. They would lose, obviously, as you can tell. So it's not like it doesn't fail. Same idea. I'm not bothering to put in more trades. So we would have lost. Okay, let's be mathematical. Everything that I marked, I'm going to put in. So this is one that I didn't activate. This is another one that I didn't activate or mark or whatever you want to say. This is 2 losses. And this would win as well. Okay, so we have 1, 2. Speaking of losses, 1, 2, 3, 4, 5, 6, 7. We would have lost 7% in trades. Did I include this one? Okay, let's say 8%. I'm not sure if I counted this one. We would have lost 8% in trades doing this. But I need a calculator for this. We would have won 19.6 plus 26.9 plus 24.45 plus did this? Oh yeah, that was the. Oh, we said that we weren't going to include this one, the 79. So these were losses. Plus 24.29. This didn't activate, right? Yeah, this didn't activate. But this one did. It activated here. This would be beautiful, actually. And this is 677. Is that enough? Yeah, it's decent.